Let's talk productivity. It's a term that I'm sure you've used in your life. You've talked about, oh, I was very productive today, or gosh, I need to be more productive, or the boss is complaining that our productivity needs to increase. Well, we're going to unpack that some in this chapter. The chapter again covers other topics, important ones like strategy and mission and competitiveness, but I'll let you read those. I think they're pretty self-explanatory. What I want to spend some time on is really unpacking this whole issue of productivity. So we're going to really have a working definition. It's pretty simple. We're going to say that productivity is the effective use of resources. Well, that's a pretty general term. So how we measure productivity is fairly universal. So those that measure those that measure productivity, you do it this way. So productivity is a ratio of output to input. So please keep in mind that we often deal with ratios in operations management, and anytime you deal with ratios, it's something for something. So hours per week, output of units per week, customers served per hour, customers served per labor dollar. So it's always per something, and that's what that little slash in the middle, while we'll say, oh, that's the sign to divide, and you're correct that mathematically we divide the output by the input, but when we interpret it, we would say that our productivity is some level of output per some level of input, and you'll see a little bit more about how that fleshes out right now. Output can be any goods or service. So if we're building cars, we certainly can say how many cars we produce per day. We could say how many haircuts we do, how many tax returns we complete, how many claims we process, how many accounts we review, how many phone calls we take. So what is a relative and an important measure in your organization? Customers served, products produced, and so it's incumbent upon the organization to decide what they want to be productive in. The other side of productivity is obviously the input side, and so then we need to determine, well, what inputs do we really want to look at? Because there are really almost an infinite number of inputs. You could think of brain cells accessed, but that's not something we're going to necessarily control. So we often measure an input, and we start with the most important input, or the most expensive input, or the input that we have the most control over. So we often see things come up like labor, materials, machine hours. I put supplies here, but I mean raw materials that go into the process. So there are lots of things we could use: electricity, gas, the list goes on and on. But the most important thing is we choose ones that we can actually control, because get this, it's not necessarily in my notes here, but it's mentioned in the chapter. Productivity is a relative measure. Doesn't mean that you use it to judge your aunt and your uncle. It means that productivity doesn't mean anything on its own. So if I just say my productivity is 6 customers per hour, it doesn't mean anything. Is that good? Is that bad? I don't know. It just is. Well, if we measure productivity today, and then we measure productivity tomorrow, then I can look and say, well, I served 6 customers per hour today, but tomorrow, or the next day, I did 8 customers per hour. So relatively, my productivity has increased. And I can subtract the second day's productivity from the first day and calculate the percentage change in productivity. Now I have a meaningful measure. So productivity needs to be measured multiple points over time. And then please keep in mind that we should then consider posting it on a line graph to be able to look at the trend. And you probably remember from your other courses how to calculate the slope of that trend line, whether it's increasing or decreasing. And then we could calculate the percentage change in productivity. So that's really the nth step in this. First off, measure it. Second off, measure it multiple times. And third off, be able to calculate the change, percentage change in it. So let's get into this. Why productivity? Why is this so important? Well, we know that high productivity is often associated with lower costs, and that comes from often volume. but it comes from using your resources well. So we know that if two companies are producing the same product and selling it to the same customer base, the company that is more productive is likely experiencing more profit because their costs are lower. Productivity affects your competitiveness. It affects your ability to produce your units potentially at a lower cost, and then you could potentially lower your cost to your customer, and still make a profit. So being productive is really important, certainly in the short run, but definitely in the long run, because companies that are not productive in the long run will go out of business. It also has a positive effect on inflation. Inflation is a measure, it's an economic measure of how prices change over time. And we find that generally prices go up over time. Well, if prices of inputs, of whatever you need, and I'm going to go back to granola again. If I make granola, and if the cost of oats and the cost of chocolate chips and the cost of sugar and of cinnamon are going up over time, then my costs are going up to produce my product. But if at the same time that my costs are going up, I can produce it more efficiently, I can be more productive, use less inputs overall to produce my output, then my cost can remain stable even if inflation is causing increases in my price. So remaining conscious and measuring, and we look for that measure to help us identify areas where we can improve our operation. Maybe we need a more efficient machine. Maybe we need better training or better supplies or better equipment or better lighting or all sorts of things. And so we'll measure our productivity. Then we'll make those changes in our operation as good operations managers. And then we'll measure productivity again to see if we've actually had an impact on our productivity by making those changes. Measurement of productivity growth. I mentioned this already, period to period. Then you can subtract the most recent period from the prior period, divide that difference by the prior period, and you have your percentage change over time. Two ways we measure productivity: single factor and multi-factor. These are it. So there won't be more. Don't worry, there's not another slide. It's just these. These are the formulas that you'll need to know. Single factor productivity, though, let's think about this a little bit. It's output divided by input, but it's single factor. That means you have to choose only one input. So if I'm measuring my operation and I'm a granola company, I may want to do pounds of granola packaged per day. So that would be output divided by 1 day. Or maybe I want to do packages of granola by labor hour. So how many people worked in that day for how many hours? Maybe it'll be 6 people times 8 hours. That would be 48. So it would be my output divided by 48. And then the next day, maybe there's 7 people working that 8 hours. So that would be 56. So it would be my output divided by 56. We could do single factor productivity, though, rather than pounds of granola per day or per hour. We could do dollars value of granola. So if I know each pound of granola I'm going to sell for 42 cents, I could multiply my daily output by 42 cents, and I could get dollars of output per labor hour or whatever input I'm measuring. I could also convert the labor input to dollars. So I could have dollars of output per dollar of labor input. The biggest challenge, the calculation is easy. The biggest challenge we have with single factor productivity is you only get to measure one. So you better pick the right one. Pick something really important to your product, which is often labor. Pick something that you have amazing control over, because as an operation manager, I'm going to measure productivity. I'm going to be held accountable for increasing productivity. I better be measuring something that I actually can influence, like labor or like machine speed or something. Now let's switch down to multi-factor. Multi-factor, still output divided by input, but I can include multiple inputs. That's where the multi comes into multi-factor, multiple inputs. Now the challenge with multi-factor, please hear this. For measuring the output, you can use dollars, as I talked about a moment ago in single factor, or you can use a count. So you could use pounds of granola produced, or you could look at the value of that granola produced. Either one, doesn't matter. On the bottom, though, everything has to be converted to dollars. So if the inputs I'm looking at are labor hours and raw materials, it would be labor plus inventory. I have to convert both of those to dollars. So I have to multiply the labor times what I pay those people. And for the inventory, I have to multiply however many pounds of flour, sugar, nuts, berries, and whatever I put in there times their cost. So please, please, please hear that. When you do multi-factor, the denominator, that's the bottom of the equation, must be converted to dollars. The top can go either way. I prefer that things are converted to dollars just in my work experience because people always care about dollars. They don't know that we produced 80,000 pounds of granola. What they care about is how much that granola was worth. So wherever possible, I do dollars to dollars. And again, hear this, when I interpret the answer of my productivity, I will say we produced, or our productivity is $40,000 of output in granola per dollar of input. So I will put the labor and all of those raw materials together and converted them to dollars, and I will use that in the equation. All right. So what affects productivity? Lots of things, and that's why it's huge for operations management, because all of these things that I'm popping up on the screen are things that as operations managers we control, which I love that last one. Management. We motivate employees. We measure productivity. We reward. We compensate. So these are things we have control over, and so we want to use them in ways that encourage our workforce to be more productive. So there's lots we can do. We can change designs. We can add technology. We can train people better. There's lots of opportunities to improve productivity. So that's kind of my perspective on productivity. Take a look at what the book says, and then please try out those problems. It'll give you the answers to those if you have trouble on doing them. But there's 2 single-factor problems and 2 multi-factor problems.